chapter 3, double entry system 2. So we have recording transactions in the book of prime entry. When we talk about book of prime entry, as soon as it's a transaction, a business will transact with other businesses. So as soon as this transaction is done, they will exchange documents. They will exchange documents for goods and money. So all these things has to be documented. So receipts will be issued, invoices will be issued based on different situations. You get a receipt because you made the payment. You get an invoice because you purchased on credit. Do you get it? So if I did not pay for the transaction, I'm not going to get a receipt. I get an invoice. Do you understand? So all these things are called source documents. So that's what a source document is. A source document are those documents that represent the transaction between you and other businesses, or between the business and the customers. I think the point is clear. So we go to books of prime entry. Why do we call it books of prime entry? We call it books of prime entry because this is where the transactions of the business are recorded for the first time before they are being transferred or entered into the ledger. So a book of prime entry, they might ask you the exam, a book of prime entry. It is where the transactions of the business are recorded for the first time before they are being transferred or entered into the ledgers. I think
so
it's clear.
It is when transferred, when there are, what is it?
Transactions are done. The first transaction, when the first transaction is done, it is entered into the book of prime entry.
So when the first transaction is done, it is entered to the book of prime entry.
With the source documents.
With the source documents.
So as soon as that is done, then you can now transfer them or enter them into the ledger. I think it's clear. Are we good?
Yeah.
So we go on to different book of prime entry. We have the purchase day book. Is there already? For purchase day book, you get that from your credit or credit suppliers. As soon as you purchase from your suppliers on credit, you get a purchases day book. It will be recorded in the purchases day book or purchases journal. And what is recorded there? Your credit purchases from suppliers. So you're going to have a purchases day book with the name of your suppliers. And you get it? It's your account. You're keeping the record. The supplier has its own record too. But I'm dealing with you now. So we have purchased from a business. We have purchased from another business. That's business to business. So it was on credit. So we have a credit supplier, which is trade payables.
Yes.
You get that? Then purchases returns day book. Some of the goods we bought, we are returning back to the business. That's return outward. So we call it purchases return book or purchases returns journal. So this means we have returned the goods back to the suppliers. As soon as the supplier receives those goods from us, the supplier will issue us a credit note.
So again, mister?
There's purchases returns, which means we are returning the goods we purchased from the supplier back to the supplier.
Yes.
So
do maybe damage, maybe double.
Yeah, damage. More than order. That means the quantity is more than what is been ordered, or it's expired. So it depends on different situations. But as soon as you return those goods back, the supplier will issue you a credit note. So the credit note will nullify your transaction with the supplier. So if you have purchased goods worth of 500 from the supplier and you are returning goods worth of 150, so that $150 you have returned will have a credit note.
Credit note.
So that will deduct the amount from your purchases.
So I have a question, mister.
Yes.
When you're doing a ledger and this thing happens, do I detect the 500 from the first account from the other 150?
Yeah, the 150, you will be issued a credit note.
Credit note.
The credit note means you are able to take away 500 from the 150. So now you are owing the supplier 350.
So, okay. Is
it clear?
Yeah.
So that is purchases returns. Then we have revenue day book. For revenue day book, that means we have credit customers.
Credit sales.
So whatever customer that buys from us on credit, it has to be recorded in the revenue day book, or revenue journal, or sales journal, or sales day book. Is it clear? Yes. Then we have revenue returns, which is return inward. Return what? Inward. This
after goods are sold.
When goods are sold, your customer is returning the goods. The reason why you are returning is the same reason why the customers might return.
Yeah.
Do you get it? So we call it returns day book.
So returns outwards is from the producer to the supplier.
From the business to the supplier, to the credit supplier.
The credit supplier. And return
inward is from the customer to the business.
Okay.
Is it clear? Then we have the cash book. For the cash book, we have our bank transaction, the cash transaction, and the cash discounts.
Okay.
So sometimes you get discounts. Then we have the journal for all transactions that are not covered by purchases, revenue, and cash. So you have a journal for that. the journal. Is it clear?
Yes.
Any question about that? Any question, please?
No.
So we have purchases day book. Are you there? For purchases day book, I wrote, this records the buying of goods for resale. It is done through the purchases invoice as a source document. So for purchases day book, it's just the same thing we talked about here, but we're taking one at a time now. For purchases day book, it means we have a credit supplier, which we have bought from and we are yet to pay.
Okay.
So the invoice, the supplier will issue us an invoice. So the invoice becomes our source document.
Okay.
That is what we use in recording in the journal. Is it clear? Any question about that?
No.
So though I wrote purchases will be debit accounts and credits, though this will happen, I'm just going to explain that. For purchases, as soon as your journal is done, your purchases account will be debited. The individual trade payables account, which are your credit suppliers, will be credited because they gave to you.
So
you credit the supplier, you credit the giver, you debit the receiver. Do you get that?
Yes.
Then for purchases returns book, this is when goods are returned to the supplier. So then the supplier will issue a credit note on that note.
On that behalf.
That, now we are out of the amount you are paying us, it is now deducted. Do you understand? So the supplier has received the goods. So you debit purchases returns day book, and you credit the customer or the business which is returning the good.
Okay.
Is it clear?
Yeah.
Any question about that? Yeah. So we have activity 1.
Oh my God. It's a work example.
Yeah, I did. No, forget about the work example. I go to the activity. I did it already. Activity 1.
Oh.
Yeah. So for activity 1, we have Boris, right?
Yes, Boris on a building.
And decorating business. He purchased goods to install a kitchen. The following is a list of transactions for Boris in July 2018. Bought goods on credit from J and Co. So we have J and Co. So we're going to have a purchases day book. This is a purchases day book and the purchases returns day book. So I'm going to explain each one. So purchases day book. For 5th of July, look at it. You have your purchases journal or purchases day book. So it's going to have just the date, the supplier, and the amount. Date, supplier, and amount for the journal. So 5th of July, J and Co. 260.
8th of July.
I use dollars instead of pounds, yeah, okay?
8th of July, T. Williams.
T. Williams,
21
660. 21 July, 540.
26, G. Jones.
J. Jones.
29.
Green and Co. So these are all our credit suppliers. So all this goes to your credit purchase. These are your purchases ledger. They go to your purchases ledger after here.
But Mr., how did you know? Like imagine it was mixed up. How would you know?
It won't be mixed up. These are all transactions.
Oh, okay.
These dates are issued based on invoices.
Okay.
So the business, Boris has received invoices for all these transactions. These are all what he purchased from different suppliers.
Yes.
But how did he get this document? How did he get this note? Because the invoice had been issued. So the dates are according to the invoices and where the transactions were done. When the transactions were done. So it's not going to mix up. So that ends the purchases day book. Then they said in addition to the above transaction, Boris also returned certain goods to various suppliers. On 2nd of July, returned goods to H. Henry. So we have our purchases returns day book. Date, supplier, and the amount. 2nd of July, H. Henry, $140. 23rd of July, J. Jones, 80. So the total returns is 220. So for H. Henry, we have 540 here on the purchases day book, in the purchases ledger. So in the returns, it's going to be 140. And for J. Jones, it will be 200 here. The return, which is going to be a debit entry, will have 80.
80, okay.
Is it clear?
Yes.
So that ends purchases journal and purchases returns journal.